welcome you watching The Burning Question with me, Shavansan. As the news tightens around PayTm, questions are essentially being asked whether at all PayTm ignored the warning signs given by RBI. That's the burning question tonight. But up first, let's take a look at the headlines we're tracking at this hour. "16 days on, more and more women join the fight against Mamata government as a showdown continues." Mamata's police blocks a BJP delegation in Sandesh Khali. BJP hits out, says democracy dead in West Bengal. ED news touts against Mamata-backed Sheikh Shahjahan. Fresh case registered searches across 5 locations. Amid massive women's uprising in Sandesh Khali, Prime Minister to visit West Bengal on 1st of March.
कांग्रेस के युवराज परिवार ने क्या कहा? वो कह रहे हैं और काशी की धरती पर आके कह रहे हैं, काशी के नौजवान, यूपी के नौजवान नशेड़ी है। ये कैसी भाषा है भाई?
Prime Minister tears into Rahul's insult of Kashi, says the youth of Uttar Pradesh won't forget the insult. Trouble mounts for PayTm as RBI asks NPCI to examine request to become the third-party app provider. The Reserve Bank of India has advised the National Payments Corporation of India to examine PayTm's request to become a third-party application provider for the UPI payments. Now, according to the RBI, the directive has been issued to ensure seamless digital payments by UPI customers using PayTm handle and minimize the concentration risk in the UPI system. Now, on 31st of January, the central bank had imposed major business restrictions on PPBL, including a restriction on accepting fresh deposits and doing credit transactions after 25th of February. Now, on 16th of February, it extended the deadline to 15th of March. But the bigger question that still remains, even at a time when there has been a blitzkrieg campaign that has been done by PayTm, whether at all there were certain warnings that were given by RBI to PayTm, which PayTm decided to ignore. Is that the reason why the news has been tightening around PayTm, and what message does it send across to the fintech sector? Take a look at this report and then we begin the burning question.
RBI is tightening the noose on PayTm. In the latest move, the Reserve Bank of India has announced additional restrictions. PayTm has been restricted from accepting further credit and also from transferring credit into customers' accounts and wallets. Further, the FASTags issued by PayTm have to be migrated to alternative accounts by the 15th of March, and the alternate accounts should be set up for merchants using PayTm QR codes. Users have also been ditching PayTm since the RBI announced restrictions on the 1st of February. Daily downloads have dropped by over 55% in 20 days. The RBI crackdown is due to various violations of licensing conditions and regulatory requirements, as well as false submissions.
RBI has asked National Payments Corporation of India to review PayTm's application to be UPI third party. Further, PayTm handles are to be migrated in a seamless manner from PayTm Payments Bank to a set of newly identified banks to avoid any disruption. No new users are to be added until all the existing users are migrated. Further, the RBI has told the NCPI to certify 4 to 5 banks which can handle high-volume transactions as service providers. Now, Finance Minister Nirmala Sitharaman is set to meet fintech leaders on 26th of February to reassure them and address complaints regarding the stringent supervision by the Reserve Bank of India. However, will RBI's action on PayTm affect fintech sector? Is there any recourse left for PayTm now? Or is this the end of PayTm's payments bank? That is the burning question.
Beginning the burning question tonight with Shashwat. Shashwat, if I can begin by asking you this question with regards to the operations that have been carried out by PayTm. PayTm says that operations will continue, nothing will impact, and if you really look at the stock prices today, it has seen a jump. But having said that, there is a big lesson to be learned, and perhaps for the fintech sector too, that all this while, if you do not really play by the book, then perhaps you will have to go through this current situation. I want to ask you this. Do you believe that if at all PayTm is going through what it is only because of the fact that they have ignored the kind of warnings that they were issued by the RBI in the past?
Whether they have ignored the warnings of RBI is a bigger question. But what I would like to say about this is they haven't done enough in reaction to the warnings that RBI has given. The facts are quite out there, are quite open for everyone to see. There have been missteps by the entity, by the bank, in terms of the handling the user KYC, the customer KYC, and also in terms of other more serious allegations of routing, right, of basically using the same payments between same funds between various entities of their own entities. So yes, there cannot be there's no smoke without fire. So there has been missteps by PayTm, and they are sort of paying for it. But yes, this should be seen by PayTm Bank also as a learning. They are not dead yet. This is not the end. I hope this is not, because this is a first of its kind action on a fintech entity in India, and as big as PayTm. PayTm being the pioneer fintech in India. I hope it survives, and so that the lesson goes to everyone else that you have to play by the book, but there is a chance if you clean up your act, if you rejig and go by the book, then you can survive.
But Kishore, would you agree with what we are witnessing today? The stock prices going up, perhaps stabilizing to a certain extent. Does it bring in that kind of investor confidence, or do you believe that this is a little short-sighted if we say that things are stabilizing for PayTm at this point in time?
Okay, let me first, before commenting on the stock prices, let me give you a disclaimer that I don't own PayTm shares. But having said that, let me tell you that this is too early to even comment the fact of the matter that whether PayTm stocks are stabilizing. I do not think that the market has discounted enough. My personal opinion is there is a lot to come out. See, because let's understand three parts of the problem. Point number one, the bank. Whether the PayTm payment bank will lose its license or not. That's question number one. Question number two, will it remain as a TPAP, third-party application provider, or will it continue a combo of a bank and a TPAP? That's second question. The third point is that will PayTm have become, will there be a hostile acquisition or an acquisition or a takeover or a merger? These are all unknown questions and people don't have answers. The more important thing also here from a perspective is that RBI had given enough warnings to PayTm in terms of compliance. See, Mr. Vijay Shekhar is supposedly to have redefined the fintech space in terms of the transactions and PayTm, and people started using that as a generic term as PayTm Karo. That's all fine, but you have to play by the books. There is a regulation, and as per the section 47 and 46 of RBI, I think due diligence should have been done. And there was an internal audit committee set up there. They had investigated the whole matter, and then this has come to light. Though RBI holds and reserves the right not to disclose every single finding, but whatever is out on media, generally assuming that most of them are true, I think it is end of the road for PayTm Bank. Yes, the business model may survive, may not survive, but there are too many ifs and buts, and I don't think so. The route on the stock is yet over. But yes, you can never say that somebody is dead, end of game. No, that's not what I'm predicting. But what I'm surely saying is that this is a wake-up call for fintech companies to know that AML and your KYC, and for your viewers, anti-money laundering, where routing of money through multiple channels and one PAN being linked to multiple KYC, multiple accounts is just unacceptable. You cannot be doing, specifically when you are handling third-party funds, your regulations are extremely strict, and I don't think so RBI has overstepped its border, its jurisdiction. It's well within its rights under Section 47 and 46 to 2. And I think this was a strong and tough message to a fintech that get your books clean and act correct.
Vijay, would you agree with what Shashwat and Mr. Subramaniam have to say on this entire matter? Because there are some within the fintech sector also essentially arguing, not really coming in from the PayTm lobby as many would say. But having said that, some say that this has been a tough measure that has been taken by the RBI, but it also sends across a very difficult message to the fintech sector, saying that, the operations become far more difficult if you really make this kind of observations.
First of all, good evening to all of you and your viewers. I hope that people, those who are managing PayTm, board of directors and key management people, they know how to read, they know how to write, they are literate people, educated people, getting hefty salary or sitting fee. I assume that my assumption is right. If they don't know what is the law of the land and they entered into business, then they could have taken help of professionals. Number two, what is the role of board of directors? You have a corporate governance committee. You have a risk management committee. Leave RBI. I'm saying even when you register a company, you say that I will comply by the corporate or company law of India. These are basic things. My question is very simple, that board of directors, I don't know who are they, independent directors, executive directors, board of directors, promoter directors, then all KMPs, what they were doing sitting there. Such examples are very good for India, and India should continue to do this. Because image of India is that we do not honor our commitments. In India, people have a tendency to bypass the law, and corruption is very high. You can get the work done anything by paying money. This is the image of India. How you will rectify? This is the way one has to rectify, that anyone who crosses the boundary should be ruthlessly penalized, because India is at stake. Number one. Number two, unless you weed out the bad companies,
but
you cannot create space for good companies. Because the biggest competition for good company is the manipulations and illegal activities of bad companies. They disturb the market, they shake the confidence of the customers, and they shake the economy. India don't need PayTm-like organizations and their board of directors and KMPs, because they are regularly violating. All such people, KMPs, including all the board of directors, should be asked to remove themselves from all the companies wherever they are sitting. Because either they are incompetent or they have no desire to learn the law and perform as per the law. We don't need such managers. India cannot afford such wrong people at key positions. Please appreciate this. So I think what RBI has done, it is good for India. It is good for fintech. This is a message to all fintech. Take example of Yes Bank. That was also pioneer. Take all the big real estate company, those who are pioneer. Ultimately, they landed in jail. There is no mercy for no nonsense should be in this country. If India has to become a developed nation, a credible country based on rules and regulations, such activities must be pursued ruthlessly. My only question to all the board of directors and KMPs were, what was their assumptions when they were ignoring or violating the laws of the land? What they were thinking, they will get away with this? Are they senior to the country and the law of the land? What guts they had to do all this nonsense? So I think what RBI has done is a right thing, and such actions should be taken. Whoever crosses the red line must be ruthlessly crushed, because that is the only way India will have the right people, right organization, and good customer service to become a reliable, growing economy in the world.
Mr. Subramaniam, within PayTm, the argument has essentially been that this has been a little too harsh, keeping in mind that they happen to be the largest, UPI user merchant. And secondly, with regards to whether at all there have been any laws that have been violated right now, one is yet to come to any sort of conclusion. The investigative agencies haven't even begun a full-fledged investigation in this entire matter. They say that the enforcement director did not step in. So do you, once again, I'm asking this question, do you believe that it's been a little harsh, keeping in mind that they are the largest, they have got the largest user base?
Okay, so answering your question, the answer is a straight no. This is not an action which is overstepping their jurisdiction in any form or manner. The reasons are simple. You may be the largest organization in any domain. That does not qualify you to violate the laws of the land, the rules of the book, and the governance and the compliance, because you're fundamentally dealing with third-party money. Period. You have no rights to do that. So RBI is well within its right. That's point number one. Point number two, it is not something that one day RBI woke up and gave you a fine and banned you from working. No, you have been consistently fined. You have been warned. October 2023, there was a fine slapped by RBI to the extent of 5.6 crores. You were consistently being monitored and told that your KYCs and other compliance are not there. An internal audit committee was set up. They had done the entire due diligence, and finally they came that this clampdown came. So it was not a sudden wake-up call or one fine day, a surprise move. Point number three, while you are doing the duties, when you are got the banking license, you are well within the norms and understanding, as the other gentleman told, the key people managers are well aware of what the banking rules are. There are audits. You are a licensed bank. You are not a private financier operating in some local area of a city. Mind you, you are India's largest fintech operator in the UPI space. Then how the damn thing that you do, you are saying that you do not know the rules of the game. And not once, not twice, multiple times. These lame excuses won't work. Do not forget that Lehman Brothers, on the day they collapsed, they were AA rated and they were probably America's largest commercial bank. So it is not the size that matters, it's the compliance, governance, and the duty that matters. And let me tell you, many organizations in many places have grown because of strict governance and compliances. And I would like to quote here that organizations in India which have grown from a single man unit to probably thousands and lakhs of employees have only grown because of honest governance, compliance, and key management people who are doing their duty. And I would like to disagree with the earlier panelist on one thing. India's image of not being compliant as far as the organized fintech or the banking or the financial BFSI segment is concerned, India has been one of the world's finest in terms of its regulator doing its job. Time and again, countries like America have failed in its checks and balances, and we can hold our head high when it's called corporate governance. Though we have been on the conservative side and maybe a little more conservative rather than being a little aggressive in opening things, but neither our insurance companies nor our banks, barring a few cooperative banks, have ever failed, be it a Global Trust Bank, be it a Yes Bank. We have always been compliant, and we can hold our head high among the leading economies to be the most compliant and governed and well-regulated.
At the same time, let's not forget, I believe Mr. Sardana wants to, take on what Mr. Kishore Subramaniam had to say, but the banking sector has had its own share of loopholes, of shortcomings, many would say, and that has resulted in several crises also, Mr. Kishore. So one cannot really say that, there have been proper checks and balances. But Mr. Sardana, a quick response, and then the last word to Mr. Shashwat Das.
No doubt that India has one of the finest regulation when it comes to financial markets and banking regulatory environment. But again, I'm saying, and I can put on record, I was on the board of stock exchanges. Corporate governance standard in India, still not something on which we can boast upon. I will say that maybe 10, 15, 20% companies may be responsible and serious about corporate governance. Majority still pick up the independent directors, those who are manageable. those who can go with the promoters. Look at the board of directors of PayTm itself. I request all the viewers, please go to the internet and download who are the board of directors of PayTm and look at their competency. Either they were incompetent, maybe they have a big designation, big status, whatever they are in the society. They failed in their duty. And that is my concern, that big names, senior names, all big glory with awarded people, when they sit on the board, they compromise on the ethics and the corporate governance standards. And that is the concern of India. And I think what RBI, SEBI and Corporate Affairs Ministry must do, become more ruthless when it comes to corporate governance to build confidence on the corporate India.
Okay, Shashwat Dutt, one quick word to you. I'm running out of time. But would you say that this is a big lesson to be learned for the entire fintech sector, or it is just yet another classic example of a quick rise without, much checks and balances put into place?
Fintech in India is one of the fastest growing sectors. So yes, today this is the story of PayTm. This could be the story of other fintech companies in India if the checks and balances are not enforced and are not in place and are not enforced. So yes, this is a big lesson for the fintech industry. The main who is suffering in this? Not the board of directors of PayTm, not the bigwigs. The small business owners, the everyday users, they are the ones who will suffer the most, because I don't think RBI has been gracious enough to extend the deadline to 15th of March, but I don't think a month or a month and a half is enough time for millions of small business owners and users, especially from rural India, as well as urban India, to shift their bank to open accounts in a new bank, and so their operations, their businesses will be affected, which is sad. But so this is a lesson for everyone, for the fintech industry especially. But we should not forget the advancements that fintech industry, the financial inclusion, and the innovation that fintech industry has brought to India, and that should be kept in mind going forward.
Well, thank you very much, gentlemen, for joining us on the burning question. On the other side, the trending burning question, coming up with my colleague Niranjan.